Hey, Colorado Springs. This is Jenny Bayless with Envision Advisors, and I am here with Josh Server. Josh, how's it going?
Good. Thanks for having me on, Jenny.
Yeah, I'm so excited to have you on the podcast today because I think that well, first off, you have a beautiful property now, and you have a
Thank
really
you.
interesting story behind it. So I definitely want to dig into that and give some inspiration to some investors out there. So, yeah,
Yeah,
so can you give everyone a little bit of an introduction, who you are and kind of your experience in real estate investing?
definitely. So I first got into the idea of real estate investing. I think, like everyone else, I read Rich Dad Poor Dad, and I realized there's a better model for making money. And uh, I figured, at the beginning of your life, you're going to be making money based on primarily on your income from a job. And at the end of your life, if you save your 10% every year, you'll be making most of your money from your investments. So I figured if I can maximize, the thing that's gonna be making me money in the long run, if I can make money faster, even 1% is going to be a huge deal of a difference in gain. So I was like, well, I looked into real estate and I was like, this isn't just 1%. This is like this is like 15% difference. It's like tripling returns that I would get in the stock market. So yeah, I wanted to invest in real estate 2 years ago while I was in Korea, but I was like, I'm in Korea, like I don't have that much money right now, and I just kept putting up all these barriers, and then I realized just through education that there's that what I thought were insurmountable barriers were really not. And it was really listening to your podcast, actually. I was just Googling like investing Colorado Springs, and you guys popped up number one. And I was like, oh, this is a really good article. And it tells me not only should I not be afraid of the current economic conditions, because the Springs, especially, is resilient to a lot of those things, but uh, like COVID isn't an excuse. The distance isn't an excuse. Like the lending shouldn't be an excuse. So I got started talking to the lender, realized I don't need 20% down. It's like, that's something I thought I needed. Um, I ended up doing a 10% down secondary home loan. And yeah, we got our first property under contract in October, closed in November. And now we got a tenant in there. And it's pretty cool.
Yeah, so I think that we should let all the listeners know that you're currently stationed in Asia right
Yeah,
now.
I'm,
So
I'm still in Asia. Yep.
yeah, yeah. So I mean that alone is a tough barrier, just the time difference and everything. So I just love your attitude about the whole thing is, hey, these are just hurdles. And we just had to get over them. And I think that speaks to what you mentioned earlier, in that the returns on real estate are so much greater than the returns in the stock market because it requires some additional work, some additional problem solving. And if you're willing to put in that time and the effort to do it, like you'll be able to realize those additional returns. So, and now that you've figured it all out, it's going to make it a lot easier for your future investments too, because you've, gotten into a good rhythm and you've, broken through those initial barriers, and everything else will just be kind of rote at that point.
Yeah, yeah. There's definitely a little bit of a myth surrounding passive income. Uh,
Very
it's
true. It,
upfront work.
yeah, I mean, it's a lot of work, but I find it to be fun and challenging, and I think most real estate investors do as well. So work is work, but you can at least kind of pick and choose what it is that you do for real estate. So that's
Yeah,
great. So yeah, so tell us a little bit about how did you land on medium term rentals as your strategy? I know we kind of talked through a bunch of different options. And just if you could just kind of tell the audience what it was that led you to that path.
yeah. I talking to my lender, Paul Aber. He was like, well, if you want to do a 10% down loan, you can do that, but you have to have the intent to live in it for less than half the year. I was like, okay, so that kind of means I can't do a long-term rental with that. So then I was like, all right, short-term rental. Like I'd seen you can juice the cash flow on a property. It takes a little bit more upfront and a little bit more management, but overall it can still be worth it. The returns look, honestly, after you divide by a larger denominator, like roughly the same, or maybe a little bit more. But I was like, okay, short-term, midterm rental. Realized the Springs is a little restrictive on the short-term rentals. They have this map, like this ArcGIS thing on their like the city website, where you can try to figure out like where's the closest like other Airbnb that's, it's got to be like, owned by and run by someone, or like owned by not but not like lived in. And it was just like all these rules, and you have to go to certain zoning districts. So I was like, all right, there's got to be a better way. You and Leah, or Leah Keeling, were able to tell me like, oh, there's midterm rentals. So then I started vetting midterm rental property managers, because it's like, if let's see, like, is this feasible? Like, what does it look like? And ultimately, I decided, yeah, I could still make good returns. The vacancy's going to be relatively low. It's really just like right between short and long term rentals. So
Yeah.
I'll fulfill my requirements for the loan. Like integrity and honesty is like a big thing in the Air Force, and that's something I decided, like, I'm not going to start out my real estate investing career like scamming. That's probably not the best idea.
Yeah. We always recommend that our clients, appeal to the terms within the loan. So, yep, just talk to your lender. They'll be able to tell you what keeps you out of orange and striped outfits. So, so yeah,
I have to wear clothes to work, but those aren't the clothes I want to
wear. So you touched on an interesting point: short-term rentals. We had a podcast a couple weeks ago with Craig Callion from Hosty, and he talked about a lot of the restrictions for short-term rentals, and is near impossible to be able to get a non-owner occupied short-term rental. There's the zoning test and then a density test, and like you said, it's just very, very convoluted. And by the time you figure out if you can if a property is allowable for it, it's usually off the market by then. So our philosophy at Envision is, what gives you the best chance of success. It doesn't have to necessarily be the absolute perfect property, but what is going to give you the highest chance of success. And medium-term rentals are definitely a better option for that, in my opinion, because not only are you able to satisfy the requirements of your loan, but there's more opportunity for it. So you're really, we'll back up a little bit. Medium-term rentals, that is a 30-day or longer rental period, which in the eyes of the law is considered a long-term rental. So you're not going to be constrained to the same requirements as a short-term rental for city requirements for that. So you're really just subject to any HOA restrictions at that point in most cases. So that I think kind of opens the net a little bit for what we're looking to do for that. So can you tell me a little bit about what your thoughts were behind the loan? I think you are our only client that has utilized this particular type of loan on a rental property. So tell us a little bit about what you're thinking when you decide to go this strategy.
Yeah. So my wife and I went to college in the Springs, and we figured, well, we kind of want to go back there sometime. And I forget, but I think there's a stipulation in the secondary home loan where you can't buy like within a certain radius of your primary residence. So if we had lived in the Springs and then we bought a secondary home in the Springs, I think it might have gotten a little screwy on us. But by buying a secondary home first, we can then move to the city and buy a primary residence. So um, that's one way that maybe some of your other clients haven't done this before because they may not be allowed to if they live in the Springs. But otherwise, yeah, it just made sense with we wanted to do a max leverage approach, and that just especially with the interest rates being what they are, or even better was what they were. But
Yeah.
um, yeah, that gave us some confidence. Ironically, we probably ended up putting in about the same as if we would have done like a 15 to 20% down because the furnishing costs. And if I had figured out some way to like finance that ahead of time or buy something with furniture already in it, that might have been like the best way to go to max
Yeah.
leverage. But that it'll all work out in the end. So
Yeah, that's a really good point, and I definitely want to get into kind of the details of furnishing a medium term rental since it is unique compared to a long term rental. But yeah, I know that you guys were looking to do a max leverage approach, which we're pretty big proponents of, assuming that everyone's financial house is in order. Max leverage can be a very powerful tool, and I know we talked about Burr quite a bit, and just I'm a huge proponent of Burr, and it is just not the environment for that right now, and that's
yeah,
okay. So it's like let's pivot and find something that does work right now, and interest rates were really really low and you guys bought, so like let's utilize that as a pro. And I think it's just kind of something that has echoed through your whole story is that you've taken the best out of each situation and used it to your advantage. So I really like that. I think that's a good point to share with everyone.
thanks.
um,
Thank you.
yeah, yeah. So can you tell us a little bit about your PM search for a medium term rental? Given that you're halfway across the world, this is a moderately time intense strategy to employ. So, the PM is kind of make or break on this case.
Mhm.
So, yeah, tell everyone a little bit about what you did to, finally vet and select a PM.
Yeah. Um, it's it's hard to know what you want until you realize like it's not happening in a conversation or a relationship. Like at first I was like I want low money down, so I was like, I'm gonna go low budget on the furnishing. But then I was like, well, the place is really nice. Eventually we ended up like spending a lot more than I thought we were going to. But at first Diana, you had given us her name, and she gave us like a rate. It was like I'll furnish your place for 15,000. And I was like, oh man, 15,000. I think I could do it for like 12. And we ended up going like over 20. So
Oh my gosh.
she, she would have probably been great. But I was like, nope, I don't need that. And then went to Cindy, and Cindy, her, she's got great connections. Both of them do, but like, she wasn't. I don't know if I were to do it again. I don't know. She just isn't quite as like high tech as I was hoping. And so like her online presence and the communication was a big thing for me too, because like she's both a realtor and a property manager, and she's got like investors and clients, and she's really busy. So like her time to respond to stuff was longer than I was comfortable with. So I ended up going to Craig, which you guys gave me his name at Hosty, and they're like coming out with this thing where they do like a 3D video of your home, and like picture version, and they've got like uh, just all sorts of crazy cool systems in place. And I just felt comfortable with them, and they list on like 50 different websites, and so I was like, yeah, I'll go with them. And then yeah, if we want to dive into furnishing, we can talk about that whole ordeal too.
Yeah, definitely. That's something I don't know too much about, but other than what you mentioned is that no matter which property manager, fits your needs best. Everyone has said that they always go over budget on furniture. So
Yeah.
yeah, please tell everyone kind of the whole process behind that. I think it's, very insightful if you could do that.
Yeah. Getting uh, furniture during a pandemic, which has wrecked supply chains,
Hmm.
was a challenge. We initially were looking for like your Ashley Home Store or like your American Furniture Warehouse, like um, the big box store places, because we're like we want to do it new because it'll just be easier. And then I was like, oh man, it's gonna take 4 or 5 months to ship this stuff. Like I can't just eat the mortgage for that long. I mean, I
Yeah.
can, but like we bought with enough reserves and cash flow and from our incomes. But like, yeah, we ended up. I looked on Craigslist for like 2 weeks, and I was trying to coordinate. I had somebody who would drive point to point to point to my place and then assemble everything. But I was trying to coordinate like 3 different bedroom sets in one trip because I was like, he lives in like Denver, and so it was like all that mileage. I didn't want to have to make 3 trips, so I was like, okay, trying to coordinate 3 different sellers in Colorado from Japan with furniture I've never seen before, except for pictures, and like one day like pickup, like that it was not happening. Like I was pulling my hair out, like
That sounds
what a
like
mess.
awful to deal with.
It was terrible.
Yeah.
So I finally found this warehouse that it's kind of a smaller place called Dream Merchant in Denver, and they had stock. They had like new stuff, decent prices. And it was all like ready to go. It's like, oh my goodness, this is the best of everything. Like I just didn't search hard enough at first. So when I found them, yeah, I was able to do that. But then I was like partway through furnishing and realized uh I can't like do the little touches. Like I'm just not that kind of person.
Hmm.
And also, who's going to be like screwing those little shelf things on the walls and putting up the plants to make it all look pretty? Like we had a friend who's able to help and collect boxes for us. We sent like 150 boxes worth of stuff to her house. Um,
Oh my goodness.
and
That's a really good friend.
yeah, we hooked her up. But she I think we were like fatiguing her, and we value that friendship more than we value the furniture setup. So we ended up hiring someone. Craig gave to us, Bridget, and she she was like, oh, you guys are mostly done. Like I'll cut my design fee in half, interior decorator, and she just went in and made it look like you see it now. Like it looks amazing.
That's
That
awesome.
that's
Yeah.
someone I probably would have hired at the beginning if I were to do it all over again. But
Yeah.
we learned.
Yeah. And maybe we'll link Bridget's info in the show notes.
Yeah,
Send some people her way and avoid some frustration for other landlords, like you said. But I think
yeah,
that's a really good point. Is that um, I would say part of investing is really just like learning along the way. And that was something that you learned. So if you were to do this exact same strategy again, you probably would save yourself a lot of headache and hassle by just going to that store that you mentioned and going to your decorator and just calling it a day.
yeah.
So yeah, I think that's really good learning points. And we'll also have to link some photos of your property as well, because everyone needs to check them out. The house looks like it's from a magazine. So yeah, you guys did
Thanks.
an amazing job on that. I love it. I think that it looks great. So yeah, so let's kind of move over and talk about the property and the numbers. Maybe this is what everyone has been waiting for, right?
That's the anticipation.
Yeah. So you worked with Leah. She was your agent on this, and everyone knows Leah is awesome. So I know she probably worked pretty hard to find you a property. Can you tell us a little bit about that whole process?
Yeah, being a distance investor, I swear Leah doesn't sleep. Like I text her at like 3 in the afternoon, and granted, my time 3 in the afternoon is like, well, it depends on time zones. It's weird. Okinawa doesn't change time zones, but I think at the time it wasn't. It was like midnight.
Yeah.
She is responding to me, and I'm like, Leah, you need to go to sleep. Like, don't respond to me. She no, it was fantastic. She'd take videos of the properties, she'd send them to us, and you get the warm fuzzy about a realtor when they tell you no. Like
Yeah.
you're like, oh, we can make it work, we can do it, and she's like, no, don't try. Like this one smells like something strange died in here, and you can't tell from the video, but don't do it. And
Yeah.
like she could have convinced me to buy a house like right then and there, but that's the thing about Envision Advisors. You guys like you want that repeat business, and you care about just seeing people's portfolios grow and doing it right. So
Yeah.
that's cool.
Well, thanks for the plug on that. I would have to agree that is our philosophy, is that we want our clients to be very happy with the property that they've bought, because, there's no point in, pulling a fast one on somebody and then them
Yeah.
being angry, and now you're no longer, a prospective client for the next one and the next one. So, if it takes us a couple of swings and misses to find a property that is the right one, we're willing to wait it out, and always recommend to the client, like, there's better ones out there. So yeah, we appreciate you recognizing that for sure.
Yeah. So she showed me probably 5 or 6. We bid on, I forget if it was, I think 2. Yeah, and we got the second one,
Great.
and we were looking at Leah helped me with my criteria too, because I came in thinking one thing, and I was like, all right, single family home. And she's like, no, maybe townhome might be better. I was like, okay, townhome. And then I was like, 250,000. And then she said, like I started looking at the like quality and like what's out there, and I'm like, okay, maybe we want to go up a little bit. And then I start talking to the lender, and then he's like, oh, you're capping out your DTI at like 300,000. Like, okay. But then we realized I could get my wife's like a debt that's like basically going to go away within 6 months. The lender can just dismiss that. I
Mm.
didn't know that at first, but we were able to dismiss this big, like, it's like an Air Force error thing that we ended up having to pay off for like a year. But we like finally were able to get rid of that and look at a 360 ish at our cap. We ended up finding one and bidding at 355. So that's what we got it for.
Okay. Yeah. Tell us a little bit about what the property, is like. So it's a townhome, um, central Colorado Springs, right?
Yeah, it's
Yeah.
southeast. Yeah, I think 80910 zip code, which is like one of the hottest zip codes in like the hottest zip code in the US or something in 2020.
I don't know if it's the hottest. 2020, I think it was 80911. But I own, I think, 5 properties in your zip code. So I would agree. I
Yeah.
really like that as an option.
Yeah, it was
It's
um,
great location.
yeah. Past performance doesn't always predict future performance, but I don't know.
Thanks for the disclaimer. Yes, yes.
Yeah.
So, is it 3 bed, 2.5 bath?
It is. Yep,
Okay. And is there a garage on it as well?
there is.
Okay, great.
The car.
Awesome. So that those tend to be like that profile of a townhome seem to be really, really good options for medium term renters. As the from the tenant perspective, it has everything that you need. Has enough bedrooms. You could set up an office. You could have other family come. Enough bathrooms. A garage for your car.
Mhm.
But without having to deal with the exterior type maintenance. No one wants to be on an assignment for several months and have to mow the lawn. Like
Yeah.
that's too much. So I think that's a really good setup. Um,
Yeah, and there were a bunch of them in a row. Not all for sale, but that gives me the warm fuzzy that like there's I forget what it's called, but multiple of the same thing in the market. So like if I'm not gonna have trouble selling if I need to someday because they'll just look next door and be like, oh yeah, property value is like probably gonna be around here ish. It's
yeah.
not like gonna be wild fluctuations.
Yep. Cookie cutter houses are good for that. I like them personally. I think it makes life easier. Um, so down payment, you put 10%.
10% down. Yep.
Okay, perfect. And then what were your acquisition costs for this one? And we'll let's say just your loan and title. We'll go into furniture later.
Yeah. Um, the loan and title, I only paid $500 for home inspection,
Okay.
550, but everything else I just wrapped into the loan. Or not wrapping. It was a lender credit.
Oh, okay. So we'll just kind of keep it even for now. I know we have 1,500 for upfront costs, but we'll just kind of putting it in and backing it out. We'll just keep it simple. All right, here's the big one. Upfront furniture costs and, rent ready type costs.
Yeah, if you want to count like reserves in there too, maybe not. But let's see, total cost of furnishing. Yeah, it was like 25,000.
Okay. And that's not including reserves, correct?
No,
Okay. Yep. But everyone out there, make
yeah,
sure
that does
you have
that does
reserves.
count like labor and stuff, like um, Bridget set up and then my failure. I did buy something on Craigslist, and then the shipper couldn't get it up the stairs because the headboard was too tall. So then he just turned around and brought it back to Denver, and I'm like,
Oh my
and then
goodness.
just refunded me, but like I still had to pay for the shipping, and
Oh man. So a lot of this, so we'll say that this initial repair is furniture, decorating, and air.
yeah,
Learning
failures.
costs. Yeah. No,
Yep.
I mean, I think that it's so good that you're being really transparent with this because I could list so many mistakes that I've made in my investments, and looking back on it, I don't care that I made those mistakes now. Like, everything is performing so well. A couple years removed, you kind of forget the sting of it later
Yeah,
on.
and then
So,
you're like, maybe I want to do it again.
yeah, it's like childbirth, I guess, right?
Yeah.
All right. So, what is your interest rate?
Interest rate is after wrapping in the lender credit, 3.375. So they wrapped
That's
in, I think,
awesome.
a little over 5 grand into that.
Amazing. Yeah, everyone who's getting quotes right now, and we're in middle of February, is probably crying hearing that rate. So,
Yeah,
great job.
I
Um,
originally was quoted a 2.875. Uh,
wow.
so that point 0.5, that's a big rate difference. But I figured based on, so the lender will give you like a spreadsheet that says like, here's your break even date
Hmm.
if you take the credit. But you got to think like that's based on their assumption of your opportunity cost with that money, and they
Hmm.
assume maybe like a 7% or something close to the stock market, but like or maybe zero. They're just looking at the just breakdown of your costs over that each month. But
Yeah.
if you look at the opportunity costs, like then I was able to extend that timeline a little bit, and basically for me, my break even is close to like year 5 or 6. So if I refi before then, and
Hmm.
if inflation is transitory, like a lot of people think it is, the rate might, look similar to what it currently is, and I'll be able to basically pull out and have one on the deal. That's my thought.
Yeah. Yeah. I believe most lenders, what they'll do is they'll um, give you a cost comparison. So lender costs for, option one is, X dollars, and you would save $30 a month. And then they'll just compare that against option two, X minus Y dollars. Difference is, $50 a month, whatever. And then they'll just divide that for a payback period. So I think what you mentioned is really fascinating, just because, I mean, like you said, you're able to keep a little bit of cash in pocket that could go towards your reserves, or it
Yeah,
could
or
go,
furniture.
yeah, or furniture, or property number two. So yeah, when we get into the numbers, is $30 or $50 a month really going to have as much impact to you as several $1,000s, when you are able to leverage it and your tenants are paying your mortgage? Your answer is probably going to be no. So I think that was, really good that you're able to have those options and consider it that way.
Yeah.
So, all right. So you're all in for about 67,000 between down payment and furniture. Down payment is a little over 35, and um, furniture and rent ready is 25. So almost, almost duplicate of that. Um, and so let's go into the revenue part. And Leah told me that you guys were booked out through May already.
Yeah.
Yeah,
Yep.
that's so good.
End of April.
So yeah, tell us what you're anticipating for monthly rental income.
Yeah, this is a hard one to forecast.
Mhm.
And going into the property, I was like, is it going to be worth it? I conservatively estimated like $3,000 a month in revenue,
Okay.
which the long term rate for this place would have been about 1,800 a month. Um, but and I wanted to make sure that it would have been like okay at least like as a long term rental because you know multiple exit strategies, all that.
Yeah.
Um, but yeah, this one actually is performing 105 a night, which is like 3,150 per month,
Okay.
depending on how many days you estimate per month. But that, yeah, that should get us about you'll see in the spreadsheet, but about break even at the end of this with cash flow,
Okay.
with the property management fee.
Okay. Yeah. So what are you guys using for vacancy? I imagine that's equally hard to try and figure out. Just, I mean, I know you guys listed in January and you're fully booked for several months, but
Mhm.
so how do you determine your vacancy factor?
This is another hard one. And in fact, this is probably even more difficult
Yeah.
because um, it's seasonal. You got this COVID thing going around, and then yeah, I basically took the difference between what the three property managers I interviewed told me I might get, and I took like 8% was the low I was quoted, and 30% was the high. So it was like I'm gonna put it at 20%, and let's see
Okay.
what that looks like, and that's where my break even numbers come in.
Okay.
It took about 2 weeks to get it listed. It was originally 125 a night was what we posted, and then after a week, they dropped a little bit. After another week, they dropped a little bit, and that finally found somebody. So I think they're still trying to figure out their algorithm on like how they're going to price these things, and they got a new like expert in there for Hosty, and hopefully they can maximize this. But because there is seasonality too, like it gets real complicated when you try to like book somebody from like bridging winter and summer, and like the summer rates are supposed to be higher, the winter rates are supposed to be lower, but they're like it's in winter when they're booking it versus yeah, it just gets like I'm not even gonna try to figure out how they're gonna price this thing, but I'm gonna conservatively estimate it's gonna stay about 105, which is what we booked here in the winter.
Okay. Yeah. And I think everyone knows my philosophy is estimate for the worst case, but then when it comes time to execute, push a little bit.
Yeah.
So I totally agree with your logic behind that. Yeah, 20% vacancy, that seems high to me, because I'm a long-term rental investor.
It's like
But
three
I mean,
percent. Yeah.
yeah, exactly. I have, people lining up before the previous tenant even leaves, pretty much. So yeah, I think a vacancy factor of 20% is very safe, because like you said, there's going to be some downtime in between. And then I imagine that this also includes when you guys are staying there as well. So there's that personal factor that you guys have to budget for because that's opportunity cost, but also regulatory requirements. So you kind of have to balance that as well. So makes total sense.
Yeah, and the thing too, I just want to clarify, like
Yeah.
the secondary home loan, you need to have the intent to purchase to live in it for less than half the year. So there's no minimum, which is like,
Oh, okay.
that's weird, but I would assume that minimum would be like a day.
Sure.
And so basically, I just got to slip in there between tenants
Okay.
to like fulfill that, but not even really, because it's all about the intent. So like
Interesting.
I am planning on slipping in there sometime to stay in
Yeah.
it. Like I do want to check out my own property, but if I don't, like, it's not like somebody's going to come after me.
Gotcha. Okay. Yeah. Disclaimer, I'm totally unfamiliar with this loan product. So thank you for that
Yeah,
clarification. But yeah, I think that would be kind of a cool experience to be able to stay at your rental and look at it through the lens of a tenant. I think that would just go to bolster your performance anyways, because you'll say, hey, we need more coffee or whatever. So
yeah,
I
yeah.
think
We
that's
got
great.
my father-in-law in there right before we rented it, and he was able to point out some things. We were like, we need to fix those.
Yeah, I mean that's great to have personal eyes on. We'll just keep rent appreciation at 3% because I mean it's so complicated the way you just described it, how they price it anyways. Like let's not try to complicate it even further for modeling
Yeah,
purposes. And then annual appreciation rate. 5% is the historical average. Everyone knows that this past year has been wild. Even though you said you closed in November, I'm sure that you've gotten some price appreciation already in just a couple of months. So
that's what
um,
Zillow tells me at least.
yeah, exactly. So we'll just keep it at 5. We'll keep it historical and conservative, but in reality, it's doing better for you. So, all right, property management costs.
Right.
What are you being charged for property management?
So I settled on what I feel like is the cheapest, cheapest one with Hosty,
Okay,
and I don't think that's representative of their quality per se, but it is something manageable for me at least. It's
okay,
15%.
15. So did they offer you like different packages? Is that kind of how
Nope.
that worked? Oh, okay, gotcha. So this is their rate.
Yeah, there's no other recurring fees, just the 15%. And then I think there's like $1,000 upstart cost
Okay,
for photos and all that stuff.
okay. Um, should we add that to or is that included
No, I
in
already
the
baked
five?
it in. Sorry.
Okay, cool. So 15%, I mean, in my mind, a medium term rental involves a lot more oversight than a long term rental. And, average PM for long term is 10%. So I don't really think that's too big of a difference.
No,
So
I
not
think it's
bad at
great.
all. Yeah.
Like Evolve and Vacasa, like the two of the big national short-term rental management companies, they will quote you like 20 to 25%.
Yeah.
So
Yeah.
it's right in the middle.
I've heard like 30% out in the mountain towns in Colorado. So yeah, I think that's very reasonable. What are you using for your monthly reserves?
Well, all my reserves are in the furnishing budget now, but we I know this is probably making you cringe because you love my reserves, but
I was gonna say, my
yeah, we
philosophy on
we have,
that.
yeah, I do. We have pretty good stable incomes that we're like, it would be hard for the military to kick us out. It's just that's how they do it. But we're like rebuilding those right now.
Okay, so just promise me you'll put a little bit aside each month.
We will.
All right. I'll put 5%, just because it's a townhome, it's a newer build. And that's typically what we recommend, since
Are
the
you saying for
HOA.
maintenance?
Yeah, maintenance reserves. Yep.
Oh yeah, yeah, yeah.
Yeah.
I put that in at like uh, let me just real quick. I want to say it's like oh yeah, this is weird too because like I would have done a percent,
Okay.
but because the revenue is like double or a little less than double a long-term rental. I was like, it could have it could have been more or less too. Like when we originally listed it, we listed it for 3,600 or 3,800 per month, and it's going for 3,150. So like, I just put in a dollar amount. I put $150 a month.
150 a month. Okay. Yeah, that's a really good point. So the way that this spreadsheet calculates is off of the gross rent. So if, typically for a long-term rental, it tends to pencil out. So in this case, because you have almost double what a long-term rental would yield, we'll just put this as 0, and I'm just going to put maintenance down here.
Okay.
Spell it right. Let's see. And you said 150 a month?
Yeah. So in terms of a long term, it probably would have been about 8% or so.
Okay. Yeah. All right. And then there is an HOA. What are the monthly dues for that?
$195.
Okay. And what does that cover?
Covers exterior maintenance as well as like lawn care, that kind of thing.
Snow
And then
removal.
they've got an insurance policy over the exterior maintenance stuff. So
Okay.
my insurance is a little lower as a result.
Great. What is your annual insurance?
$711 per year.
That's great. What are your taxes for property taxes?
Property taxes $1,224.
Okay. All right. So looking good so far. So as a medium-term rental owner, I imagine that there are some expenses that you have to take care of that a typical long-term owner wouldn't have to worry about. So do you guys pay all the utilities? Does the tenant pay you a monthly fee for that? How does that work?
Yep. So utilities we pay for, and that's going to include, I don't know if you want to throw Wi-Fi in there. Wi-Fi is like $40 a month. And then utilities, electric, gas, wastewater, water for $200. Well, that's what I am budgeting. I don't really know.
I mean, that seems reasonable. And then HOA does trash removal?
Yes.
Okay. And they take care of landscaping. So yeah, this is kind of why Leah and I really like these townhomes that are in an HOA for medium-term rentals, because for a long-term rental, it doesn't matter as much. The tenant is likely going to be responsible for landscaping, trash, all their utilities. But if you're paying $195 a month, it at least is covering things that you would have to pay anyways as a medium-term rental owner. So I think that's kind of just some interesting food for thought for that. And does the tenant pay you any type of like allowance or anything for their utilities, or is that just baked into their nightly rate?
Yeah, it's baked into the nightly rate.
Okay.
When people say like, oh, I can pass these costs off to the tenant, it's like, well, the market will adjust. Like the supply demand curve, like you're still on that. It's just you just moved yourself toward one side or the other on the pricing. So
awesome. And then I imagine that you guys probably charge like a cleaning fee, and that's probably a pass-through cost.
Yeah, that one is actually pass-through. So it's like $250 per stay.
Okay. Great. Am I forgetting any costs that you have?
Nope.
Okay. All right. Drum roll. All right. So your total all-in investment, 67. Total annual cash flow before taxes, 1335 in the red. That is not bad at all, because we need to remind everyone that you only put 10% down. So, if that amount, were to be bumped up to 25%, you would definitely be back in. Well, let's just try that. Okay. Yep. Now you're in the positive $500 a year. Is that worth 35,000? Probably not. Because I know you're a big opportunity cost guy. So Yep. I think 35,000 to basically break even on an appreciating asset that someone else is paying down your mortgage. Um, that's a pretty good return. Of course, the furniture piece, we we can't forget about that, but in future I think that you'll get that a little bit lower now that you know what you're looking for there.
Yeah.
Yeah, so what are your overall thoughts on your final numbers?
Yeah, I'm happy with it. If I, you know, refi in a couple of years, I can do this all again.
Yeah.
Which is that's I like the Burr strategy best, but um, I wasn't confident enough to try to pull it off from a distance. So this is like the Springs. I think is a good market for like good appreciation,
Mhm.
and that's like the closest thing you can get to the Burr strategy in terms of like velocity of capital because you can refi fairly quickly in this market.
Yep, I agree. I know Chris mentions it a lot when it comes to house hacking that everyone, wants to do the burst strategy, but house hacking, and I would almost say that this is a somewhat a form of house hacking, a little bit removed, but with house hacking, you can put 3.5 or 5% down, and that's all you have in the property. That is almost as good as a full burr without the risk. So I think that's just something to kind of consider in the market that we're in right now. But yeah, I'm super excited for you on this. Just kind of going over some of your return on investment quadrant that we have. We have appreciation at just shy of 18,000 a year, which I imagine that you're probably maybe halfway there if I had to eyeball it, just, in the couple months that
Yeah,
you've owned it. Debt pay down. So your tenants are paying $6,000 a year right there. So, and of course, we have a little bit negative cash flow. Hypothetically, we'll, being conservative with your vacancy and everything. Um, and depreciation at 2,700. So, yeah, 25,000 a year for 25, well, excuse me, 35,000 plus 25,000 down. That's pretty good. It's almost, it's 40% return on investment in your first year. So
yeah, which
that's
is
really good.
a lot better than 7%.
Yeah, I would
So
take
I was
that
like,
any
I can
day.
wait till I get back to the spring or get to the States or start now. Yeah.
Yeah, yeah, and like this tab right here, um, Chelsea Scott, our financial advisor on the team, she always likes to say, if you're having a bad day, just scroll right on your on your
Yeah.
spreadsheet.
Just don't
So
look at the ROE. That one goes down.
yeah, yeah. It's always fun to, kind of look a little bit. So yeah, even if, you came back and we'll say 3 years from now, your total equity is 110,000. So that, that would all be opportunity costs that for you to wait on that. So
Yeah.
that's pretty exciting. And yeah, ROE can always be solved through trading up or
Oh, yeah.
re-leveraging. So
Yep.
that's a good problem to have, in my opinion. So,
Yeah.
um,
I made a spreadsheet to tell me like when would be a good time to refi,
yeah.
and basically as soon as possible. Like the moment you're like a couple percent over the min like LTV down required.
So does it take into account? I know this is kind of a tangent. Does it take into account like changing interest rates, or does that not
It
have as
does.
much of an impact? Oh, it does. Okay, cool. I'd be curious to see that.
Yeah. We have to wade through my it's not as pretty as your spreadsheet, but
Okay. That's fair, that's fair. All right, so thank you so much for, going really into the numbers on this. I'm sure that this is gonna be really helpful for a lot of people. Do you have any lessons learned other than, the furnishing aspect to it? What else would you want to impart on people that are considering this as an investment option?
well, the line you got me with was don't wait to buy real estate and wait
Yep.
because you could put up also if you have the I won't even put any barriers out there. Like if you think you've got barriers, like maybe you don't. Just figure out a way to get over them one at a time, and you know, little bites of an elephant, and eventually you'll eat the whole elephant. So
Yeah, I that's why I love your story so much is because it's easy to make excuses not to do something, and you have just taken reason for excuse after excuse and you turned it into, okay, well, this is just a challenge to overcome. All right, this is just a small speed bump to get over, and you've been able to tackle each one, like you said, one at a time, and now you have a beautiful asset that is going to serve you well for many years, unless like you said, unless you decide to trade up on it. But so either way, that that is there for you. So I think that is just something that I hope also resonates with people as well. Yeah. So is there anything else you'd like to impart, for anyone listening, or
no,
no?
that's it. Yep.
Okay.
Just do it.
Yeah, just do it. Nike, right?
Yep.
Well, Josh, thank you so much for taking time out of your day. I know it's super early where you're at right now. So we really appreciate, you getting up and explaining and sharing your story with everyone. I know that a lot of people will come away from this and learn a lot from you. So thank you so much for that. We really appreciate it.
Yeah, thank you. I've listened to every single episode you've got, so
well, we
it's fun to
appreciate
be
that.
on it now.
Well, awesome. Yeah, we really enjoyed having you on. So if anyone has any questions out there, send me an email, jenny@envisionrea.com, and we'll post some contact info for what Josh is willing to share in the show notes. And happy hunting everyone out there. So have a great rest of your day.